Hi there, Shingirai here again with another update on global current affairs. We continue to see an escalated level of volatility in the equity markets, mainly driven by a couple of key themes such as the upcoming US election, Brexit negotiations, as well as the ongoing COVID pandemic. This week marks the sort of last week of, in all earnesty, of Brexit negotiations, and the markets have been somewhat optimistic coming into the week, but we have seen a reversal of that coming into the second day of this week's trading. The COVID pandemic continues to be ongoing with increasing levels of cases in the northern hemisphere as some parts of Europe begin to experience a rolling second wave of the COVID pandemic, and that would see just last week the UK going into lockdown, and just at the beginning of this week we've seen as well there have been an estimated 1 million deaths from the COVID pandemic. Moving on to the US election, a couple of factors that investors will have in their mind when they're thinking about a Trump versus a Biden presidency. Of course, the polls indicating the likelihood of a Biden presidency currently. We did see President Trump, when he came into office, slashing corporation tax down from about 35% to 21% where it is currently, whereas Joe Biden has indicated that he would likely increase that from 21% corporation tax to 28%. And then, of course, increasing the level of regulations as his running mate Kamala Harris has previously fought for with regards to big banks. With regards to energy, again, another contrast here between the two candidates. Trump having pulled the US out of the 2015 Paris Agreement, but Joe Biden committing to a $5 trillion spend on making America, the United States rather, 100% clean energy driven and having a net zero carbon emission by the year 2050. As we know, in terms of trade, President Trump has sporadically protested against the trade agreements that he has in place with countries such as China and regions such as the EU rather, and has been questioning these all over the tenure of his presidency. But of course, we would likely to see less noisy trade disagreements coming out of a Biden presidency. The Democrats are currently proposing a $2.2 trillion stimulus to further support a COVID pandemic weakened economy in the United States. But of course, that will have some difficulty going across the more conservative Republicans. This week, would likely be seeing some Chinese PMI data coming up, as well as US employment figures reports from the month of September being the last report that we'll probably be seeing for employment before the US election in November. In today's trading, Asia was relatively flat, although yesterday we did see an upswing in US equities measured by the S&P, Dow Jones and the Nasdaq, which are all up more than 1.5% in the green. Today, Europe has seen some weakness, especially led by banking and cyclical stocks, and that would see the Euro stocks down about 0.28%, whilst the FTSE 100 was down about 0.4%.